Welcome back. A bit of a blow for indebted South Africans. The Reserve Bank's Monetary Policy Committee has raised the repo rate at which it lends to commercial banks by 25 basis points to 6%. That means the prime lending rate that affects most consumer rises to about 9.5%. The bank is acting preemptively because inflation is expected to breach its targeted ceiling of 6% by next year. Raising interest rates has the effect of ensuring there is less money in our pockets, which means less spending and a slower rate of price increases. The problem, of course, is that higher rates can also curb economic growth further.
The Reserve Bank tried to navigate an extremely tight rope. Economic growth prospects are poor and electricity constraints remain a major bugbear. At the same time, the central bank is worried about inflationary pressures, driven by the relatively weak rand and higher food prices, among other factors. The rate hike will be of little consolation to households already saddled with higher electricity bills and rates. A household paying off a 500,000 rand mortgage, for example, will have to find an extra 82 rand a month for the instalment. Economists say it will be a tough ride for the consumer.
It all means that the basic cost of living has gone up a little bit, and what it emphasizes, we are in a rising interest rate environment. It's no longer flat, it's going up, and be prepared. There will probably be another rate increase before the end of the year, and I would say in the first half of next year.
On the Reserve Bank's announcement, the rand immediately strengthened against other major currencies, but that's likely to be short-lived. Once the US Fed strikes with its first interest rate hike later this year, automatic dollar strength will render the rand still relatively weak. This spells higher inflation and more interest rates, putting the consumer in an increasingly tight spot. Nompumelelo Siziba, SABC News, Johannesburg.
Well, let's just get a taste of reaction on social media. Tito Mbata telling us with the growth rate and CPI at 4.7%, that's the inflation, the last reading. I don't see why they hiked, even if they are forward-looking. Tito, what analysts are saying is that we will breach 6% and it could happen pretty quickly. Buhle says as hefty as 6%. Maybe we need it. We need to stop consuming and really save. We need to live within our means. I agree. Ellis Mnyanda, rather, says as expected, the South African Reserve Bank seeks to stay ahead of the curve, chooses inflation over growth, but at what cost? Kenza, did they raise rates because of inflation or that US will increase their rates? I think both. And when the US increases its rates, that could weaken the rand and lead to more inflation. So those two are linked. Buhle says, when interest rates go up, it means one thing: clear your debts and don't create new ones.